evening, all. Ira Epstein of Linn Associates with your metal market wrap-up. And this wrap-up's for Monday, October 11th, 2021, and we're at 5:45 p.m. I didn't think I'd be here because I was supposed to be tonight, actually this afternoon, at the White Sox second game at home. However, it's been put off through tomorrow. I can't make tomorrow's. I got business appointments and so on. So at least I got to go to one playoff game, and I'm on time for you. Now, I think the theme we have to understand is the little genie's out of the bottle. I am not talking about Shaq in one of those movies. I'm talking the little genie being the inflation word, and it is out. And there's other things happening with it. While the energy price is going up, what is the cure for high prices? The cure for high prices is high prices. They bring on more production. For those of you that get my full research report, tonight you're going to see I spent quite a bit of time this afternoon, since I wasn't going to the game, writing about that and who's come to the rescue. And it isn't the Lone Ranger. It is the independent oil producer. And these people are coming on gangbusters. They have access to bank money. They have access to family money. They own wells, and they are turning them on because the only balance sheet they have to pay back is what? Their own. That's what's going on. You'll see people like Sam Zell. A year ago, I noticed he was buying up pre-drilled wells. You watch what happens with that. That'll be it won't be a public company, probably be a private for a bit, or he'll sell them. I don't know what he's done with them, but you're going to see that. But I write about this tonight because that's what we're dealing with. While we have inflation, and there's inflation rampant because anything that has to do with energy is more expensive. It's part of our going green. You know, it's not completely ever thought out the way it should be. Example, maybe we should have done this 2 decades ago. Instead, we're racing at it now, and we've come to the conclusion in America that we're green, so we'll just buy the oil from OPEC. Does that sound green? Is that the net impact of green? I won't go there. What's the lousy market? Gold. Eventually, it's going to come alive. I don't know the year. I don't know the day or the week. But it just doesn't respond with the inflation the way the other markets do. The stock market is. Every time recently it's stuck its head up and that word inflation comes out in the press, it gets thrown back. Bonds and notes are paying attention. They keep that grind now to the higher levels. You'll get corrections, but you're going to higher levels. Bitcoin approaching the $60,000 level, certainly doing a lot better than the gold market. And when we take a look at a gold chart, there's nothing here that I can imagine that looks good. If you see something bullish out of that, you're anticipating, you're not reading the chart. I'm not asking you to project it. I'm asking you to say, what's bullish on that chart? You're under the 18-week average. You keep making lower lows. I don't see anything on a closing basis. I can see on the Dees Gold bar chart the sideways action. Okay, which way will it resolve itself is undetermined right now. We have a pattern of a low that's got a lower low, then a higher high. We're sort of drifting. Remember what I teach. The 18-day average of closes is the line in the sand. You hear me say it all the time. Why? Moving average traders love a DMZ zone, the area between North and South Korea where nothing exists. That is that number. But when you're over it, you have upside bias. Under it, negative bias. It's a filter if you're trending. You're not trending, so we're doing nothing. There's a big layer of resistance up here at the 1805.30 to 1806.40 area. That is the combination of the 100 and 200-day moving averages. But another number that you have to be looking at now are these Bollinger Bands. And what they've done is they were really wide. They narrowed in. You had another down leg. You came up a bit. You're correcting, and they're narrowing in again. This will not stay that way all that long. Gold will eventually move one way or the other. You know, you get under these lows here. Are you looking all the way down in the 1500s? You could be. Let's talk about slow stochastics. Sometimes momentum leads the party. It's not. It's about as neutral as you could get. It's going sideways at the 50 level. That's exact neutrality. Nothing there. So in the gold market, in summation, I see a big nothing, period. When I look at the gold-silver ratio, well, it's fallen back where silver's finally getting a bit stronger than gold. Don't know what that's about. I doubt it's an inflation play, but you can see how silver is holding the 18-day average. It has the pattern of higher lows, higher highs, but like gold, that narrow Bollinger Band, these two black lines, they're coming in sideways. Momentum had been pointing up. Now the market's trying to get momentum to go a bit sideways. We're knocking on the door of getting overbought, but not there. Any reading over 70 in the slow stochastic would be overbought the way that I teach it. Other people look at the 80 level. To get there, you're going to be right into that upper Bollinger Band. Am I bearish? No. What do I think the pro's doing? I think he's nibbling on the long side, but he has to have a stop right under this low here. And if you do that at 22.18 and a half, and let's assume he's buying the market here at 22.48 or thereabouts, that's a big risk. You know, you've got to decide if that's the kind of risk you want to take on. In the silver market, this is where I think profit's being taken. I know you're going to say, Ira, it's running. This is it. It's going. Nah, I don't buy that. The copper, just like it's done back here, I play percentages when I come out with my analysis for you. And that is what the game is. You look at it to see just what is going on there, and that's the percentages. And you look to see where the markets could be or won't be. And up there, the 100-day average, first challenge of the upper Bollinger Band overbought, I think the pros are taking money off the table. That does not mean I said get bearish. It's not what I said at all. I think they're taking money off the table. Copper has to make up its mind in this overbought. Does it eventually want to embed or just correct the overbought situation? Why wait around for it is what I think the smart money's saying. In the platinum market, you got overbought, and you got overbought right back here. Let me take you to it. You got to the upper Bollinger Band, challenging the 100-day average, went into something of a stall. It's exactly what I'd expect. Are we trending? No. You have a lower low, higher high. Palladium market, higher lows, higher highs. Market is a bit in the overbought area. I don't see an edge there, but I am bullish. Now, suddenly I'm also noticing platinum and palladium came alive. Could that mean something good is going to happen in the auto industry? I don't know. But if it does, they're going to be the benefactors. I'm going to ask you a question. How many semiconductor chips are in the average American U.S. automobile? Tick-tock, tick-tock. They say 1,400. That's a heck of a lot of chips. I didn't know that. I just read that. Dollar index. Trend is up. Now, here's something you must keep your eye on. This is how the market looked coming in. Overbought corrections normally do one of two things. They either embed where they come up, they lock in, and they make another move to the upside like that, or they correct by going down and price drops with them. This is the action as of last Thursday. Let me carry you to Friday. On Friday, we had an outside day to the downside. My rule that I discovered years ago is the pros, I think, buy within 2 trading sessions. If it's a 15-minute chart, 2 15-minute bars. 1 hour chart, 2 1-hour bars. Daily chart within 2 days. If you take out the high here, the goal of the market is to get up to the upper Bollinger Band. The fail-safe is if you fell back through the low of whatever the most recent low is going to be as that occurs. This is what you did today. So for me, doesn't mean I'm going to even be close to being right here. I wouldn't be surprised if the market wants to make a run to 94.67. Another move to the upside, capturing a group of shorts right there in an overbought situation. I'm wrong in my thinking if the lows of Friday are taken out. Is that fair enough? So you put it all together. That's the game plan that I see. You know, you can get what we've got right now. It's all in a futures trading kit. And to get it, you need to do no more than go to our website at www.iraepstein.com. Everything here, including a sample to my research, can be included all that by going there. And by the way, Tonight, you're going to see the new look of our website. Now, I just spoke with my IT department. They're working on it. I don't know what time it's going to come out, but I think you'll like what it does. It'll be up to date. You're not going to have to search for my YouTubes anymore. Just go to our front page of our website. They're all going to be right there. Subscriber, everything that's there. And then above it, the catalog of all the services that we have with everything else. I think you're going to really like what we see. I'm going to start sending out to by email to some of these new courses that Merck keeps coming up with. You might want to take a look at those. How do you get all this? Just go to our website under free offers and away you go. I'm Ira Epstein. Thanks for watching, and I'll see you tomorrow.